Hey everyone, this is Tim Dial with Nexa Mortgage, and I just wanted to put this quick video together to go over a few things. Of course, today was the Fed meeting day, and a lot of people are expecting them to go 25 basis points, but we were kind of thinking they would probably go 50 instead because of what's going on in the labor market. And that is indeed what they did. They dropped the rates by 50 basis points. That doesn't necessarily mean that translates immediately to mortgage rates coming down, but eventually it will. Sometimes it takes a little bit for the mortgage rates to catch up. Initially, the short-term rates get better, and that's what happened today. The short-term rates got better. That would be things like credit card rates, stuff like that. Um, but eventually it will come to mortgages as well. And we'll probably see it to start turn around, maybe even by the end of this week or early next week. We'll see those rates start to come down on the 30-year. So that's on the 30-year mortgage. That's kind of what we're looking at right now, what we're kind of expecting. So wanted to go over that really quickly with everyone here. The important thing is that when the sellers see that or when a lot of sellers, what's happening is there's been a lot of pent up seller demand as far as a lot of sellers have just been like, I'm not going to go and sell my house and buy something else, even though I'm in a situation where I need a bigger house. I'm not doing it because I currently have like a 3.25 or 3.5% interest rate, and I don't want to sell my house and have to buy something else at 7%, right? And so a lot of sellers have just been holding off and holding off and holding off. So we've been in kind of a buyer's market for a while, and as a result, buyers have been willing to negotiate the price of their homes. A lot of times, pay the closing costs on the transaction. Like I just had one where the buyer paid all the closing costs. The seller got his appraisal money back at the closing. The buyer got the buyer got his appraisal money back at the closing, his deposit back at the closing, and and that's because the seller covered all the closing costs and the buyer was getting down payment assistance, so the down payment was covered. So he literally came out of pocket zero to buy a house. That has been the case lately because of sellers willing to negotiate. We're going to see that start going away as we enter more of a seller's market. Um, and what's going to happen is you're going to see more sellers putting their homes on the market soon, and there's going to be a lot more buyers coming on the market because they see this. They see this change. It may not happen tremendously here at the end of the year. End of the year is kind of a slow time, but by January, I think we're going to see a big uptick in activity, and as a result, you're going to see the prices start to go up more on homes and things like that. And we're going to go into a little bit more of a seller's market as a result of a lot of more buyers on the market because sellers also have to buy. So, um, so we're going to see that happen probably early January. And as a result, a lot of these really good deals we're seeing right now are probably going to start going away a little bit. But the rates are coming down, and that's going to cause a lot of people to increase their activity and think about selling and buying, or first time buyers to say, hey, maybe I can afford more now than I could have 6 months ago. Rates have already come down some. We're down in that low 6% range right now. But I think by January, you're probably looking at 5.5 or lower, maybe by that point. So it's a good opportunity right now to get the process started. Try to take advantage of some of these really good deals, and then you'd be able to refinance as these rates keep coming down. You'd be able to refinance, so you get kind of the best of both worlds, where you get the better pricing and the better deal on the front end, and then within 8 months or so, be able to refinance to the lower rates as the rates really drop down over the next year or so. Because what's going to happen is the Fed, this is their first time lowering the rates. They'll probably lower another 25 basis points in November, and then starting next year they'll lower some more. We're probably looking at them coming down by 1.5% or so within the next or by the end of 2025. So as a result, there's going to be a tremendous opportunity right now to get in on a good deal and then refinance later to get a good deal on the rate as the rates really drop. And the other thing too is if you are somebody who is selling and want to buy something else and you have a good amount of equity, then check out my video on the all-in-one loan because that's going to be a better option for most people in that situation. If you have a good amount of equity, then the all-in-one loan is a great option because the rate doesn't matter as much because of the way the all-in-one loan calculates interest. You're paying interest on less money all the time because of the deposits lowering the amount you owe all the time. And as a result, a lot of people, most people are going to pay their house off in 10 to 14 years. I'm currently in the process right now of refinancing my house to an all-in-one loan, and and it's going to be a great option for anyone who has a good amount of equity in their house and would like to pay their house off in less than half the time. So that'll be true too. If somebody sells and buys something else, you can use the all-in-one loan to buy the other house, and then you never have to refinance again. And that's because the way the interest is calculated, you still pay a lot less interest. So anyway, that's pretty much it. So check that video out if you haven't seen it yet. It is here on my YouTube page, and that's pretty much what I wanted to cover at this point. So hope y'all have a great evening, and I look forward to talking to you soon. Thanks. Bye.